The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah, I love all the hosts. I love your show. I'm addicted to it.
That's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are only responsible for your half of the relationship. There are two halves in every relationship, but you're only responsible for your half of that relationship. It's not up to you to control the other half. Respect the other half, and there's always going to be peace in that relationship. Market-wise, let's take a look at it out here. We have the Dow Industrials down 18, NASDAQ up 12, S&P's up 3.5, gold contract up $7.50, traded at $1,342 an ounce. Silver up 26 cents at $20.25 an ounce. Platinum flat at $1,136 an ounce. Copper flat at $2.18 a pound. Light sweet crude down 71 cents, $41.21 a barrel. Bonds, 10-year up 1 tick, 132.18. 30-year up 5 ticks, 173.12. King dollar down 317 ticks, traded at 96.72. The euro is at 110 and the yen is at 105. My phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, let's take a look at this, baby. So, folks, we have been at the same place for approximately a couple weeks right now. 216.79. This spies and an ABC structure on the way up. Your price projection on this baby is 218.90, and I expect we're going to get it. What you're doing out here today, which is pretty wild, is that we actually, we've done 46 million shares here. Yesterday, you start pushing high with 84 million. So you're actually back down here with lighter volume. That's saying, guess what, man? This thing's going to break topside and finish this ABC off, which is pretty sick, I know. But that's what it wants to do. The NDX 100, the Qs, same setup in the Qs. Qs are in an ABC structure on the way up. We're at 114.92 right now. That structure has a price projection of almost 123. So that is some juice. So you're talking about that's 8 points higher. After the close out here, we're going to have Google and Amazon coming out 4 o'clock. Bottom line, I expect what you're going to see here, and this is going to be deviant too, man, because Google is only up 74 cents right now, but guess what? This baby, the way this is set up, is to get up into $800, and right now you're at 742, man. So this is going to be wild watching this thing shake out. It pushed into the high yesterday with volume of an ABC up. Has the juice today. It's a monster ABC up. Amazon. It's a wild card. But guess what? Amazon wants to probably go up $50 too. This is sick, I know. So Amazon, what has Amazon done? Amazon's pushing into its 757 swing high. We're at 749 right now. We have volume of 3.8 million. Expect you're going to do about 5 million, so that's pushing into the highs with volume also. What does that set up? Guess what, folks? That sets up that NDX 100 wants higher price. The NASDAQ Composite wants higher price. I expect those are going to finish off that ABC structure on the way up. Gold contract. What do we have with gold? Gold contract out here. Trading. We traded up to 1344 today. GCZ. We're on the December contract right now. December contract traded to, 1352. Couldn't hold price. Right now, we're at 1342. Bottom line, what does that set up? That sets up, number one, it's going to go after the swing low of 1318. What I expect you're going to see here is that it's actually going to get down to 1288. It looks like a small ABC structure on the way down. If we go over to the GLD, because we are going from one contract to well, we're already gone to the December contract. The GLD will really give you a better indication when you look at the price and look at the volume, all of the above. So on the GLD, what we did yesterday, folks, is this. You go higher with 17 million shares. You go into $128.12. Well, that is a nice expansion of volume, 17 million, but it's not enough. We were coming into 26 million. Bottom line, that's you get higher today. You have lighter volume today. That sets up. This baby wants to come down into this 120, 158. So the deviant moves, I suspect, are going to more than likely come about tomorrow. Friday in the metals market is always a tough one. Now, not always a tough one, but it can be a tough one. Now, let's go right over to the dollar, because the dollar is the culprit here. And this is what you have in the dollar. So, yesterday, we have the Fed come out. Fed says, hey, listen, things are pretty good. You know, it's not that they said they were going to go up on rates, but bottom line, I suspect they're going to start yapping that they're going to go up on rates. What does the dollar do? Dollar yesterday goes from a price point of 97.54 down to 96.71. Today, we get to 96.24. And this is a classic, folks. It failed on price, failed on volume. So it got to lower price, rejected lower price, has dramatically lighter volume. Right now, it's trading at 96.72, and 96.70 is the benchmark. This is like sick, because 96.70 is the high of June 24th. That's when it went topside. Now what you have is this, is that you got, first we spiked higher on June 24th. Then what you do is you go sideways, okay? You were building cause, and the cause that was building was for higher price. Well, we got higher price, and we got up to the price point of 97.62. When we did that on lighter volume. So it's like, okay, man, now you got to pull back. It pulls back, and what does it do? As it pulls back, it rejects lower price today. It does it on lighter volume, and you don't even have to just, what's cool about this is that you don't, the benchmark is the 24th, but you don't even have to use the 24th, and you'll see that it went against the 30th with lighter volume, that's where we had 40,000. It went against the 15th with lighter volume, that's where we had 22,000. It went against the 19th with lighter volume, that's where we had 24,000. So what does that set up? That sets up, folks, coming into a Friday that I suspect it wants higher price, and we'll see what ends up happening, because what very well could end up happening in Japan tonight is that it's the yen, that a quick move in the yen, folks, can do some heavy damage inside markets very quickly. The bottom line is that they're waiting for more stimulus in the Nikkei. We'll see whether they get it or they don't get it. Bottom line is that those markets are going to be highly volatile out here tonight because, of course, you're dealing with a market that has been basically pushing monetary stimulus in for over 10 years. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrial's down 14, NASDAQ up 13, S&P's up 4. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
The Dow Industrial's down 18, Nasdaq up 11, S&P's up 3.5. And as we do each and every Thursday at 20 past the first hour, we have our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, 5 to 6 Eastern Standard Time right here at TFNN. Andy's got a great show, the Technomento Commodity Hour. He also has a great newsletter. You can test drive his newsletter 30 days absolutely free. The way you do it, come over to our website at TFNN. Hit newsletters, hit trading newsletters, can test drive the Technomento Commodity Report 30 days absolutely free. Now, if you're in the East Coast, driving down the beautiful East Coast, sweating beyond belief, because my understanding is that between Boston and New York, it's 100 degrees. It's probably hotter than it is where Andy is in Las Vegas. It's definitely hotter than Florida. Or if you're on the West Coast, which is a little bit cooler, listen on your car radio. Remember that you can get us right on your cell phone 24 hours a day. You go to TFNN.com, you just hit Tiger TV. You're going to get great HD quality video as well as audio. Andy Heck, what's going on?
How you doing, Tom? So I hear you have a webinar tonight.
I do.
Excellent.
6 to 7 tonight. We are going to be rocking out here, man.
I'll be tuning in. That's so let's talk a little bit about the Federal Reserve, all right?
Yeah.
So you know, they came out, they did nothing. I think that was no surprise.
Right.
But I think there's an interesting pattern here. And it's a pattern of, and I think this pattern will continue, it's a pattern of promises or excuses.
Right.
This month we got the promise.
That's right.
Next month we'll get the excuse.
Right.
Which will probably be the presidential election. So while they promised to raise rates 3 to 4 times in 2016, and while they told us yesterday that all of the data is in place for a rate rise, they said, but we'll wait. So it's really unbelievable to me.
That's right. And what happens here, what happens, folks, is that the next meeting is not till September 21st. So we don't have one in August, which is pretty neat. You know what I mean?
So 8 months are gone, and we're at the same rate we were on December 31st, 2015.
Right. Right.
And I reckon that on December 31st, 2016, we will be at this rate.
Yeah, no, listen, I can see it. I can see also in the middle of it that they're going to set up that they're going to make like they're going up, or they want to go up, but they just can't.
Well, they want to go up, but they don't want to go up. They're afraid. They're kind of afraid to go up, and they're kind of afraid not to go up.
Yeah, no, I agree.
This is not. this is not a group that is leading the economy. That is for sure. They are actually, the Fed is supposed to be leaders. The FOMC. They're actually changed their followers here. So, very interesting. So gold and silver popped up.
Yep.
We're $30 or so, or $40 off the recent highs. Anything can happen. These are volatile markets. It could go down to 1280. It could go up to 1428. I eventually believe that we will see 1428, which is the next level of resistance. Silver can dip down to $18, but I think it's on its way to $25. And platinum is really starting to move. The most bullish thing that I see for precious metals here, Tom, is the moves in the platinum gold spread, which has gone from $350 discount, platinum under gold, to a $200 discount in a very short period of time.
I know. Yeah.
Right? And the silver gold ratio, which has gone from 83 to 1, which was a 21-year high back in early March, to 66 and a quarter to 1. Today.
Okay.
So the fact that these other precious metals are strengthening is very bullish for the whole sector. Now, platinum, if platinum could get above 1180, which is $20 above today's high, which you know as well as I do, is like a nothing move in platinum.
Right.
It can go to 1500 very quickly.
Right.
On a technical basis. So the precious metals are looking good. I mean, I'm not in favor of getting in big on the long side right here, but everyone should be ready on a dip to buy these markets, because these markets are going to be in play for a long time.
Yeah, no, I agree. I mean, I think we're in a correction, but there's no doubt that's all it is. And what's going to be so wild here, a lot of it is going to have to do with how the Fed is yapping.
Yes.
The
Fed is yapping, but they're becoming. I'm writing an article with the help of my dear friend and our colleague, Mr. David White, who comes up with some of my best titles for articles.
Oh, I can imagine.
Called the Fed,
like Fake Book.
Yes, the Fed Who Cried Wolf is his latest one, and that'll be coming out next Monday.
Okay.
But
it's a fact. That's what it seems like.
Is.
I mean, that's what it seems like, right?
Absolutely. So let's turn to some other commodities here.
Natural gas.
Hey, I would just had it up there.
Natural gas.
That's what I wanted. Big surprise today. 17 billion cubic foot injection. Let me tell you what's going on here. We're up 20 cents today.
Yeah.
And hey, we're up 20 cents, but we're still 15 cents off the recent highs.
Yeah.
Last year, by the end of July, there was 1.411 trillion cubic feet of natural gas injected into inventories.
Okay.
This year, only 826 billion cubic feet. It's 41% below.
Yeah.
Because of the low price, less production. This number today shocked the market 17. Usually this time of year, they're putting 100 billion in. They're putting 100 billion in, but not this year. This year, it's really responding to the price. So we see there's going to be resistance up at $3. We'll see if it could get through there. Hurricane season, but certainly very interesting. Open interest has dropped dramatically. You had a big move up on good volume today. So, this thing could carry through. It could have another 15 cents, but I reckon it will run into some problems at 3. If it gets through 3, 3 and a quarter is going to be very, very hard for it, given the amount of reserves of natural gas there are.
Well, what are you thinking about crude oil?
Crude oil still looks ugly, Tom. Crude oil looks like it's going to $38.50. And the reason, in my mind, has been what I've been saying all along, is weak product prices.
Okay.
You have weak gasoline, you have weak heating oil, you have crack spreads. Last year, the gasoline crack spread was $25.
Yeah.
It's $13.42.
Wow.
Last year, the heating oil crack spread this time of the year, $20, $13.80. If the people don't buy raw crude oil, they buy oil products.
And that's where, when the crack spread goes down, these companies make less money, right? Or is there more? There's more supply.
Well, there's either more supply,
okay.
less demand, or both. But the companies like Valero make less money.
Sure.
There's another thing weighing on that we talk about gasoline and heating oil all the time. Jet fuel is also a problem because of all this terrorist nonsense going on in Europe.
Yeah.
The State Department issued a travel alert for U.S. citizens traveling to Europe this summer, which is curtailed travel, which means less planes are flying, which
Yep.
means less jet fuel is being consumed. This all weighs on the price of oil. Plus, there's big inventories of oil around still. The contango has widened. 38.5 seems to be the target here. We're going to have to take a look down there, and then we'll see. It is getting very oversold, though.
Yeah, it's been oversold for a
you
while,
gotta watch,
though, right?
Yes,
Yeah.
you got to watch the dollar here, because if the dollar starts going down, because of the lack of Fed interest rate hike, that could prove supportive for oil. Oil's been tracking the dollar pretty well lately. So
Right.
we'll have to keep our eye on that. Some other really interesting commodities, sugar. Sugar is heading a little bit lower here. Breached the 19 cent, closed at 18.80. I think that due to the 2-year deficit in sugar, it is a scale down buy here, looking for 23 cents.
Yeah, you stay right there, Andy, all right?
Sure.
Cool,
Absolutely.
man. And don't forget, folks, you can get Andy 5 to 6 o'clock tonight right on your cell phone, TFNN.com, hit Tiger TV. Andy and I will be coming right back, folks. Dow down 13, Nasdaq up 14, S&P's up a 4.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 11. The Nasdaq's up 14. S&Ps are up 4.5. We're talking with our man, Mr. Andy Hecht. We are talking commodities. And, bottom line is that, I know both of us think this market's going to pull back, but, man, this market's staying tough, isn't it?
Which one? With the stock market?
Yeah, right.
Yeah, it's juice, baby.
Juice.
It's got steroids. It's on central bank steroids. I mean, where else is money going to go? Money's like a magnet. It goes to the growth, and because stock market's sucking it in. Listen, it's musical chairs over there. When the music stops, it's going to be very ugly.
Yeah, no doubt.
No doubt. The higher it goes, the harder it's going to fall. That's kind of my.
That's how it goes.
That's it. That's why you scale. That's why in markets that are highly volatile, you scale down buy, you scale up sell to take profits, and you don't be a pig. That's it. And speaking of pigs, Tom, that's a subject that I know is always close to your heart. Let's take a quick look at the price of meats. Cattle traded while I was gone. It traded down to $1.05 a pound. It's the lowest level in years. We're up at
Look at that.
$1.11.
Wow, that got smoked. Holy.
And look at the pork market. Look at those hogs, man. They're dosing. They're dosing.
Look at this here. Let me just I just put a continuous contract up of wow.
Yeah. So
I mean, what is the story with look at that, folks. It's given just about, I mean, I used to trade this thing when it was down at 80 and 90, and I liked it then because it never moved much. You know what I mean?
Oh, what, the cattle?
Yeah.
We're talking cattle. Yeah. I mean, the cattle have been coming down because the soybean meal went up, and animal protein producers sending animals to early slaughter this year instead of paying high feed prices.
Okay.
We saw it in 2012. We saw it a little bit more this year. Eventually, a shortage will develop. But I think the big news is the move in the lean hogs. If you look at that contract, that thing fell off a cliff.
Let me bring that up. So they're both going down, huh? Yeah, this is down another 3% today. You're at 59 cents a pound. Look at, oh man, what a trip. LH1. And so is this the same phenomenon that feed's too expensive?
I think that what happened was that over here there was a short-term deficit, and China kind of bought up a lot of pork, but I think they've stopped buying. And now it's, again, musical chairs. You know, they stopped buying, so there's no one left to buy. We're coming back down to like 60-cent level.
Yeah.
Then the cattle hog spread has moved back to like 1.8 to 1 from 1.2 to 1. The norm is 1.4 to 1. So pork is getting very cheap relative to cattle.
Yeah.
Pork is getting cheap relative to steak, but they're both going down.
Right.
So, enjoy it. Fill up the freezer because next year this time probably won't be this cheap.
It's just the opposite. Yeah, I know.
Right.
Pretty
it's
amazing,
just the way.
man.
Way that goes. Let's see what else I have on my roster here today. Cocoa. I think cocoa's down in the buy zone. Cocoa's an interesting commodity, Tom. Cocoa is highly, the 65% of the world's cocoa comes from the Ivory Coast and Ghana.
Listen, I know. I read about that guy, man, that buys up everything and
chocolate finger.
Yeah, exactly.
Tony Ward.
Yeah.
I worked with him at Phillip Brothers. Anyway, Tony Ward is located in London, and that is the hub of the international cocoa market.
Right.
And cocoa, the most active physical cocoa forwards and so on and so forth are priced in pounds sterling. So when the pound sterling cratered, cocoa came down because cocoa is actually up in pound terms.
Wow. Okay.
So that's what we're seeing here. But cocoa is running into some very important support right here at around 28.50.
Yeah.
I think it's a buy here.
Because if you croak 27.45, man, it's going to be back at 2,500.
Right, but I don't think that's happening because demand for chocolate confectionery products from Asia continues to rise exponentially. And, once you try chocolate, you're hooked.
There's no doubt, man.
You're hooked for life. The other really interesting market here that I love right now is the cotton market, which has been dead for a long time. In the Technomental Commodity Report, before I went away on vacation and to get married, I recommended a cotton ETF product when cotton was trading around 64 cents.
Nice.
Looking for a breakout. And it's broken out. It's up around 73 cents. I think that this move can carry cotton up to 80 to 90 cents, where that's my target for cotton here. Remember, cotton was $2.27 a pound in 2011. They built up massive inventories. Those inventories are coming down a bit.
Yeah.
And, at the price at 60 cents, it wasn't that economic to grow cotton anymore. So we're having a price correction here. I think we'll have another little pop in cotton in the weeks ahead. I'd buy dips there now. Frozen concentrated orange juice is a market that went from $1 to almost $2. over recent months on citrus greening and things like that. But today we're seeing the first signs of demand destruction at higher prices.
Okay.
And it is down 10 cents. I know you like that. That's the first commodity you ever traded, isn't it? It's the first commodity you ever made a deposit in.
Yeah. And that deposit, folks, was in like a minute and a half. I lost $2,700.
Of course, that you probably at the time couldn't afford to lose.
No, I had a fortune then, actually.
Oh,
it
did
wasn't.
you?
Yeah.
Okay.
Yeah. I thought. Yeah. 'Cause
So it
I was
wasn't
trading-
a-
I was
it wasn't
trading- I
an
was trading-
expensive
I was
lesson.
trading bankrupt bonds. Yeah. No.
Oh,
It was. But I was smart enough. Hey, I still has $300 left. I said, give me the freaking money back. It's like, oh my God.
Give me the money and let me get out of this office.
Yeah, right. Because you know what's so crazy about that, and this is what's always crazy, folks. What happened? I never knowing, Andy, in that bankrupt bond market, I really owned that market. Do you know what I mean? Because I was the market. You know what I mean?
Uh-huh.
So before I'd buy or sell anything, I'd already have it sold. You know what I mean? It's just and that if you want to wrap your head around it, that's what trading desks have, folks. When you think the trading desk are trading, no, they're not trading. Okay, they own the market. They already
they make the bid offer spread.
Exactly.
Right.
So,
and the wider the bid offer spread is, the more juice there is. For
well,
those
and in the
traders.
bankrupt bond market, which distressed market, there is no market. So
it's really not called trading. That's really called arbitrage.
there's no doubt. Yeah.
Right.
There's no doubt. So
Anyway, let's just take a look. Grains. What can I say about grains? They went up. They came down. It's all about the weather. It's all about the WASDE that comes out in August. You know, we're halfway through the summer. Crop progress is good.
Isn't that wild, man?
Yeah, just volatility here. At the end of the day, the prices of corn and wheat are so cheap here. People need to eat. You know, these things have limited downside. They always have explosive upside, as we saw in soybeans, which went from 8.5 to almost $12, in a straight line. Now they're down below 10 again. Big volatility. But the interesting thing there, unlike oil, the crush spread continues to be very strong, which tells us. Let me put the crush spread chart up here.
Well, that's Kevin Hinks. He's always he trades the soybean meal. That's his big deal. Yeah.
Right. Well, the crush is the meal and the oil.
Okay.
And listen, people do not buy raw soybeans. You don't go to the store unless you buy edamame, right?
Yeah. Right.
But most people, the consumers, big consumers, they buy soy oil. It's cooking oil, or it's in salad dressings and mayonnaises, all kinds of things we buy. Right. They also buy soy meal. It's in animal feeds and all kinds of things. So those are the consumer products. Those products have not come down as hard as the soybeans, and they led the rally up. So demand for soy oil in Asia is still very good. Demand for meal is still good. So that is a supportive factor for the price of soybeans, as opposed to crude oil products, which are very weak and hurting crude oil here.
I have to love it. Listen, folks, 5 o'clock, 6 o'clock, right here tonight. Listen to our man, Mr. Andy Heck, TFNN.com, hit Tiger TV. Andy, have a great one. Thanks so much, man. We look forward to the program.
Thanks, Tom.
Stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Right now we have the Dow flat, Nasdaq's up 16, S&Ps are up 5.5, and of course, coming into the close out here, the amount of equities, folks, that are going to be coming out after the close today are just over the top. There's so many of them. Mr. Dave White put it up a little bit earlier in the den, but you're talking about, it looks to me like, let's see, we get to 2, 4, 6, 8, 10, 20, 30, 40. You get about 150 equities coming out after the close. If we go to the couple monsters that we're looking at, Amazon and Google, I expect both of these folks to go topside in a big way. So bottom line is that I'd let all these ABC structures on the way up finish out. What's going to be really intriguing here is that if, in fact, Google is an ABC up, because Google's taken its B point out, taking it out with volume. And, Google hasn't shown, any action in a couple of years. We've been in a consolidation. The consolidation, lows of this consolidation has been 663. The high is 775. This structure, however, has a price projection of 814. So it's going to be wild watching that shake out, because that would be saying that things have changed just about a bit. Looking at it fundamentally, it seemed that Facebook was taking a lot of their advertising business, but we'll see. When you take a look at the numbers in general, what you have with Google is this. Google is expected to take in $16.9 billion. That's where it's shaking out right now. So we'll see where that comes out. And Google will come out right at the close. Amazon is coming out 1 minute after the close. And right now, Amazon, let's see what Amazon's doing. Amazon is expected to take in $29.5 billion. So both of those big numbers. That's how we'll see how this shakes out. But that's what we're looking at. We go take a look at the Facebook. If we take a look at Facebook in general, Facebook also got dramatically higher today, has volume. I suspect it's still going to go higher. It hit the ABC structure on the way up. It hit it last night. There's an ABC on Facebook at 130, 131. We hit 128.33. It has plenty of volume, though. You're talking about you're at highs with 74 million shares. So that's big numbers. Their fundamental numbers are huge. There's no two ways about it. When you look at the structure, what you have is that 5 years ago they were taking in $5.1 billion a year. Now they're taking in, let me just get this in front of me, FB. Yeah. So 5.1 billion they were taking in 2012. That's the whole year. Now they're taking in 6.4 billion in 90 days. That was this quarter. Next quarter, they expect to take in 6.8 billion. And the utilization, just so if you really want to wrap your head around this, their utilization is 67%. What that specifically means is this, is that the millions, and there are hundreds of millions actually, there are over 100 million subscribers. The millions of people that are on Facebook, 67% of them go on every day. That's like just insane. I mean, that's a big number, folks. And bottom line, you know, we'll see what happens when this ABC structure finishes on the way up. 877-927-6648. I think the, coming into tomorrow, coming into Friday, what's going to be really cool is watching where this dollar wants to go. Because the dollar, looks to me, folks, that it rejected lower price once again. It has been doing this consistently for about 3.5 weeks now. And this one today was a big one because it had every right to go down and to go down big, because the question, the Fed didn't come out and say that, that bottom line that they're going to raise rates. What they did do, that they changed the language in the, in their statement. The part of the language that they actually changed was the part about the utilization of the amount of jobs that are already out there. And what the suspicion is that the Fed is actually saying that we are at full employment. So we'll see if that's the case. As we've said many times, with world rates where they are right now, it's going to be very tough for the Fed to go up at all. Doesn't mean they won't, because 0.25%, is not a big deal. And when you actually look at it politically, what you have is that if we look at these, this is what you have. So you get, let's see, the meetings, there's the calendar. So the calendar, there's no August meeting, and the next meeting is September 21st. One after that's November 2nd, and then December 14th, So the kicker there is that do you go up in September? The election's in November. I can't see going up right in November. Or do you wait till the whole thing's over and you go up in December? Or you just don't go up at all. I think what you're going to have, when we talk about Andy, it's going to be the yapping, the talking about where the rates are going to go. Because what we have seen from the Fed is this. The Fed in February, March, and April were out in the marketplace. The Fed governors, all of the above, every one of them was yapping that, hey, listen, things are fine, we're going up on rates. Then what ended up happening is that the jobs number come in for May. It was a disastrous jobs number. They're saying that was a one-off, may or may not be. Bottom line is that was a bad jobs number. And that shut everyone up. It shut everyone up in a big way, too. So what I do expect you're going to see, once again, though, is they're going to start again. Because what can they do? Their next worry is that if you actually do go into a recession, what are they going to do? Where are you going to go with the rates? How are they going to do those rates? Some of the higher volume stocks in this market out here today. We have Ford Motor down at $1.11. You got Facebook's up $1.69. Apple's up $1.40. We got GoPro up $1.53. You have Whole Foods down $3.28. Let's go look at Whole Foods, WFM. Whole Foods, talk about some volume. This has been in a consolidation of trading at $30.38. This is building costs to try to break out this bottom. Whole Foods, one-way trip, $57 in February of 2015. Baby goes straight down into the $28 level, been building cause at that particular point. And this is coming down, big volume, man. So this is saying it's going to go after... Yeah, it's going to go after the 28. If this breaks that 28 area, man, and it has some volume, get out of the way. Let me put this on a monthly. Oh, look at here, look at here. This thing's going down anyway. This thing's going... So $17. When you look at Whole Foods, folks, if you're watching Tiger TV, at $17, that was the last time it had volume on the way up. It's already croaked. This is pretty amazing, actually. But guess what? More supermarkets are having better food these days. That's what that comes down to at prices that are not the type of prices that Whole Foods, Whole Paychecks. That's that brand. A great store, but Whole Paychecks, guess what? Different ball game. 877-927-6648. Stay right there, folks. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and get ready for some nice big action after the close here. We're talking about right at 4 o'clock, folks, because what we're going to have is that you're going to have Google come out at a split second, well, hundredths of a second after 4 o'clock, and then you're going to have Amazon at 4:01. So you can expect big action out here. I expect what we're actually going to see is that we're actually going to see the NDX move higher. But guess what? Either way, Google and Amazon are capable of going up or down $50. My take is that they're going to be going up. The Google deal is really a trip, man, because that's an ABC. And remember, ABC structures, the way ABC structures work, folks, is that they're straight line moves. So A to B is a straight line move. B to C drives everyone crazy. It goes all over the place. C to D is a straight line move. And many times that when companies do come out with numbers, they can basically do the C to D pretty quickly. In Google's case, that would be really bizarre if, in fact, it got that kind of juice. Well, let's see. If a 5% move is $35, so that's normal on a good number. Amazon, the way Amazon is trading right now is that Amazon's pushing its swing point, pushing it with volume. So Amazon is also saying, guess what? They're betting that right now this thing can go topside with juice. It hasn't hit its high yet, which means that it's more probable that it's going to not only hit that high, but blow that high away. And the high we're talking about is the 757. Last time up there, we did 5.6 million shares. When we started the 4 o'clock hour, we were like 3.4. So the buy-in's coming in pretty good here. So we're going to know ASAP. And the NQs themselves, the NQs right now, you got to remember something. This is where it's always cool, because if you trade the Nadex product, this is when you want to get over there, and take a look at either the spreads on the NDX 100 or the binaries on the NDX 100. And, you can test drive that platform, bring it up to put $25,000 of paper money to account. And this would be a great day to do it, because what does happen is this. The futures don't close until NQ, till 4:15. So there is going to be movement. If you're a bull or a bear, there's going to be movement. There's going to be big movement inside this NDX 100. The high of today is 47.21. We're laying out here right now at 47.16. So it's all of the above. And of course, then what's happening is that, what are we doing? We're going right into window dressing. We have the, let's see, today's the 28th, I believe, right? Yeah, today's the 28th. So you're going right into window dressing tomorrow. That'll bring us into Monday or Tuesday, and then we'll see just what this market can do after we've had all these numbers to digest, window dressing to digest, and guess what? Then you're coming into hurricane season. We know hurricane season has actually already started, but what does tend to happen weather-wise and market-wise is that September is always basically a tough one. It seems that September and October it just lays out that way, and it can lay out that way just on a normal retracement on a market that has got basically higher highs on a continual basis. The XLE oil still continues lower. Tomorrow morning you're going to have ExxonMobil. We're going to have Chevron come out with the numbers before the open tomorrow morning. So that's going to continue to bring some real action inside the oil market. You had Royal Dutch come out in the UK out here today, and they got toasted and roasted. So the bottom line is I expect those large integrated oil companies are going to have a hard time staying into higher price. You stay right there, folks. We'll be coming right back with lots of numbers for you at the 4 o'clock hour. Dow Industrials down 13, NASDAQ up 15, S&P's up 4.5. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. Yourself?
Good, pal, good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are responsible for your own happiness. Happiness never comes from outside of you. If you put your happiness in someone else's hands, they can always take it away. Happiness can only come from inside of you and is a result of your love. Market-wise, Boys, let's take a look at it out here. We had the Dow Industrials down 15, NASDAQ up 15, S&P's up 4, gold contract down up $8.20, trading at $1,342 an ounce. Silver up 25 cents at $20.25 an ounce. Platinum flat at $1,135 an ounce. Copper flat at $2.18 a pound. Light sweet crude down 83 cents, trading at $41.09. Bonds, the 10-year note up 2 ticks, 132.20. 30-year bond up 5 ticks, 173.12. King dollar down 362 ticks, trading at 96.68. The euro's at $1.10, and the yen is at 105. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You have the SPY laying out here, folks, at a price point of 216.77. You get a price projection of this ABC structure on the way up of 218.90. I expect we're going to hit it. NDX 100. Now, this is where it's going to get really wild, folks. The NDX 100 closed out here today at a price point of 114.98. That also is in an ABC structure on the way up with a price target of the 122 area. Now, that being said, it's going to be wild watching this shake out. Why? Google just come out with numbers. Google basically hit some good numbers, evidently, because Google closed at $745. It's trading at $773. That's the yin on it. The revenue estimate, bottom line estimate, was $8.03. They made $8.42. So they made their number, made it good. Now, that's the yin. The yang, Amazon. Amazon closed at $752. This is doing better now. This was down to $730. This is at $742. So now this is down $10. That being down $10, though, doesn't mean a thing. Why? Because it was up $15 today. So we'll see. There's going to be a lot more earnings coming out as we go through this program. Bottom line, if we take a look at the NDX, the 3 Qs, what you have with the 3 Qs, we closed at 114.98. Now you're trading at 115.07. If we go into the NDX 100 and you want to see some action, you get the action in spades. NDX 100, when Google come out with the numbers, spiked all the way up to 47.32. And right now we're at 47.18. Bottom line, it wants higher price. Gold contract. What do we have with gold? What we have with gold, GCZ6. Gold contract today, GCZ6. Gold contract and the silver contract failed on price and volume. What does that mean? That means that you got over the highs of yesterday, you closed underneath them, you had lighter volume. Bottom line, we'll see what ends up happening coming into Friday. The gold contract today, we're on the December contract. That got to a price point of $13.52. Right now, you're at $13.42. The high of yesterday was $13.50. Bottom line, that is saying you're going to go back into the lower swing point, and we'll see where that shakes out. My take is that this correction in gold is basically on. So we'll see if, in fact, that's the case. We go to silver. What do you have with silver? Silver's the same type of setup. Deviant, no doubt, but the same setup. Silver got to a price point today of $20.58. Volume wasn't bad. You know, yesterday silver had a great day, man. Silver went from 1957 to 2047. Bottom line, you closed under 2047 today, and that means that, guess what? You know, you can pull all the way back. So the first leg I expect we're going to get is 1927. And let's go right to King Dollar. So what I expect we're going to have, it's going to be overnight, folks. There's going to be some big action. Japan's probably going to start the action tonight because what's going on is that they have a couple meetings going on about more stimulus, and the bottom line is that they can twist that yen, and that yen can twist the rest of the markets around the world in about a heartbeat. So, and the correlation of what? The yen and the correlation of King Dollar. And King Dollar out here rejected lower price today, had lighter volume. We got to a price point of 96.24. We're at 96.67. We did 22,000 contracts. That was going against about 60,000. Yeah, 66,000. So what does that set up? That sets up that King Dollar still wants to get up into this $98.91 area. That is where King Dollar was breaking down from when we came down in February. If we go PCLN, Priceline, Another big monster out here. Priceline closed at $1,326. That's trading at $1,285. That's not really that much of a pullback, not for a $1,200 stock. That isn't even with the numbers out. All of that is in the correlation of another equity coming out. That's what it looks like. Let's see, Expedia, So Expedia closed, I see, thank you, Dave. Expedia closed at $119. That's trading at $108, so that's why I see Priceline down. The numbers on Expedia go like this. They were expecting $2.25 billion. They took in $2.2. So with revenue estimate was lower, their earnings per share was higher. But guess what, folks? If you don't take in more revenue and you're saying you're making more money, market doesn't like it. The estimate for earnings per share was 75 cents. They did take in 83 cents. Bonds. Let's go over to the bond market. We go and take a look at the 10-year. So we have with the 10-year is this. 10-year out here still looks like it's in an ABC structure on the way down, and this is going to be wild watching this whole thing shake out inside the 10-year. We're at 132.20. You've done 1 million contracts out here today, and this is just so subtle because you're coming into 1.4 million contracts. You know, tomorrow's going to be a big day, folks. That's in the bond market, in the metals market, in the dollar. All of the above. My take in the NDX 100 and the NASDAQ composite is that we are going to see higher prices. Why? Because what happens is that the NDX and the composite is in a confirmed ABC structure on the way up. The shocker is that, you know, yesterday, Google had taken out its B point of an ABC structure on the way up. And that structure has a price projection of $814. And it's going there, man. I mean, bottom line, you're up $20, $30 right now. But guess what? Google wants to do that ABC structure on the way up. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Amazon, let's go over to Amazon because now what you have. So now the futures are closed, folks, but when these futures open back up, we're going to have some action here. As we did the last 15 minutes. So Amazon closed at 752. Now it's trading 768. So at 768, let's see, is it this? This is going to be really bizarre, folks. Yeah, this is also. So check this out. This was pushing it to a swing point also with volume. This is probably another ABC up. It's just amazing. So let's see what Amazon has to say first. And this is what's going to get. See the ABC structure up in the NQs and the QQQs. Bottom line, have to do 7 points, man. So that is some big numbers. So let's see what Amazon has to say. Their operating income, there's a lot of numbers here. Okay. The estimate was $1.12. They made $1.78. Earnings per share. Operating income was $1.3 billion. Net sales was $30.4 billion. So let's look at the net sales because that's a big number. Let's see where we are here. $30.4 billion. Yeah, that was right. That's right. Well, actually, 34 point. I didn't see the. That's a big number, man. That's a big number. So bottom line is that, we'll see. You're at 770. So if this is an ABC up too, let me see. This would be a much smaller one. So this is your A point is 682. Your B is 757. 82. 5. 71 bucks. Your C point is 728. So what? 803. 803 on Amazon. This is going to be crazy, man. It's 772, so that's pretty easy to get to. Yeah, no doubt about that. And of course, Google. Let's see what numbers on Google. What Google has to say. Google's estimate was $8.03. They took in $8.42. Second quarter profit before certain items was $8.42 a share. That exceeded analyst estimates, which is $8.03. Revenue excluding payments to distribution partners rose to $17.53 billion. Bottom line is that you get higher price, and there's juice behind that move out here. So 773. Google is an ABC structure up to 814, folks. So inside that context, what you're going to have is that these Qs are going to. So the Qs right now are trading at $115.22, and that ABC structure up is 1 to 22.92, I believe. So this is going to be really cool coming into window dressing with the NDX happening. Because this is, so the yin and the yang goes like this. So check this out. The SPY, folks, has been trying to finish this ABC structure up for quite a while. It's having a hard time. It's only 2 points away from it. And I expect that what we're going to see is that you're going to see the NDX, the NASDAQ Composite, and the SPY finish this up simultaneously, and the SPY is going to have a harder time. And the reason I'm saying that is that tomorrow morning you have Exxon and you have Chevron coming out with numbers. Now, both Exxon and Chevron are large weighting structures inside the S&P. Well, both of them are weak. Exxon is down 71 cents today. It's the last week and a half. It's come down from 95 bucks. It looks to me like, you know, it wants to go after the swing low from the 27th of June, which is 89 to 88 bucks. Chevron, same setup. Chevron is trading at 101, and that looks like it wants to get into the same swing area, which is the 10. Well, actually, it's already there, which is pretty cool. 101.40. We hit 100 today. Bottom line, it looks like it wants to go to 99.52. And in that context, now this is what's really cool. You know, our man, Mr. John Logan, kicks us off in the mornings, folks. Okay, but if you go over, you know, he goes right around the world on these world indices, letting you know what's happening. Well, what you had out here is that this morning in the UK, bottom line, Royal Dutch, you know, got toasted and roasted in a big way. Lloyd's Banking, where's Royal Dutch? Oh, I can pick it up right now. Oh, 1 second, I get it. But that Royal Dutch, that took some heat out here this morning. Here it is. It was down 7%. They came out with the numbers this morning. They're down 7%. Monster volume, gaps off the highs, has volume that's saying, hey, it wants lower price. Well, guess what? You know, these large integrated companies, mostly, particularly commodity companies, most of the time are going to trade close to the same. They don't have to be the same. There's no doubt that there's some that are much better than others. If we do go over to Expedia and take a look at what's going on here, Expedia is also going to scale back plans for a new campus on Seattle's waterfront, saving the online travel agents $600 million in construction costs. The company currently is in Bellevue, Washington. It's decided to take a different approach and build only space as it needs, rather than building excess space. What does that mean? That means things are getting tighter in the travel space. That's what it comes down to, folks. One of the things that concerned us about the design that we were looking at was the need to build out more than we really needed up front. The move closer to downtown is an effort to appeal to young tech workers. The move westward is seen as a blow to Bellevue, where Expedia's current office tower is one of the main landmarks. The new headquarters will sit on 40 acres, which was the Amgen campus. Expedia bought it for $228 million. Oh, my God. Can you imagine? $228 million. Unreal. Seattle's on fire, folks. Yeah, there's no doubt about that. STMP. Let's see what we have here. This is Stamps.com. Oh, man, this is... So Stamps.com closed at $80.84. That's trading at $84 right now. And this baby here, let's see. So this has been on a downtrend since 123. 87. I wouldn't touch this. This is only coming back to ice. That's how this is shaking out. This is coming back to ice. You know, and this stock had, you talk about a nice run, man. I mean, this was an incredible run. You know, you go back to 2010, it was an $8 stock, goes up to 123. That's like a 12 bagger. That's like a commodity stock. You know, commodity stocks like to do those 10 baggers, but guess what? A few other equities not only like to do them, have done them. Some of the Dow stocks we have out here, this is where what we have. Honeywell today was up 80 cents. You had Caterpillar down $1.18. Boeing was off $2.95. If we go, let's go take a look at Boeing. Okay, so Boeing's in a large consolidation. Oh, yeah, but it's off the... Boeing can't get by ice. Yeah, but Boeing, we're at 133. This thing wants to get down to 121. Yeah, so bottom line, NDX 100, NASDAQ Composite, let them finish that ABC structure up before you do anything. And folks, tonight, you want to come to a great workshop? I'm going to be doing one from 6 to 7 tonight. Check it out on the front page of TFNN. You can test drive my daily newsletter. Absolutely free, 30 days. You get my book, you get the Tiger's Den, all of the above. Absolutely free. Front page of TFNN. Coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Let's go over to Deck, D-E-C-K. This is Decker's Outdoor Footwear. This closed at $63.43. And we're trading $63.43. Let's see what they have to say. Okay, so their sales were $174 million. They got a big loss. Holy cow. It's actually less than they expected, though. So they expected a $2.07 loss. They had a $1.80 loss. The revenue, the expectation was $169 million. They made $174. So bottom line is that they did pretty good out there. It's not doesn't look to me like it's 15. Yeah, it doesn't look like it's trading. Oh, these are the UGG boots, huh? Yeah, these must be the UGG boots. Okay, I remember these things. If we go back over to Google for a second, look at Google. Google's still up there at what, 55, 65. So Google's up $30 after the close. Amazon is up $13 after the close. PCLN. You're gonna get the yin and the yang out here. Look at even Priceline's coming all the way back. Priceline closed at $1,326. That is trading right now at $1,300. It was down at about $1,250. WYNN, Win. Let's see where Win is. Win closed at $104. That's trading at $98. So that's given up. Let's see what Win has to say, because Win, folks, is all going to be about Macau, China. What is the revenue? So let's take a look at it. The estimate was 98 cents. They made $1.07. Revenue, second quarter revenue was $639 million. Let's see, so Macau, China revenue was up 3.6% year over year. That's not that much. Las Vegas revenue is down 1.1. So you get kind of a washout here. But they did make more money than the estimate. So if we take a look at where we're trading right now, you're trading out at 98. You were at 104. This is at highs anyway. Let's take a look. Well, not at highs, but at highs to 102. Yeah, this has been trying to get off the lows for quite a while. So when this has been a one-way trip. So the high in Win was March of 2014, $247. Go straight down to $50. Man, oh man. Now I think you're off these lows. You know, depending on how this pulls back. Yeah, I think it wants to test the 90 to 86 area again. But guess what? That might be a buy. Because we came down there last time and was testing the lows of March. We did that test with 5 million versus 7.5. So if you get lighter volume again, when you go down into that lower price point, that would set up that thing wants to go higher. American Airlines. So let's go take a look at American for a second, because what we do have out here with AAL. American Airlines is trading at 36.34. This is way off its highs. Yeah, so this is off its highs of 56. The reason I'm bringing up American Airlines is that you'll hear this tonight. This is, you know, bottom line is that they must be having a fight with their pilots, because efforts by American Airlines to keep flights on schedule during the summer travel season are on the verge of violating safety rules, according to the Union for the Carrier's Pilots. The world's biggest airline has been increasing aircraft speeds, rerouting some flights, and pushing cockpit crews to lengthen their workday. The latest steps in a campaign to improve on-time performance. The Allied Pilots Association warned about the changes in a message Thursday from Union President Dan Carey, who encouraged members to report issue. The conflict is the latest between American and its 15,000 pilots. Union leaders earlier this year said at a meeting that the top executive left them discouraged about prospects for real change in culture. And the key part of the chief executive's office, Doug Parker's plan to improve the airline. Pilots also bristled under the order that aircraft doors be closed early to ensure that the planes leave on time, even when some passengers are left at the gate. That sounds to me like they got a cat fight in there. Baidu.com. Let's go take a look at Baidu.com. That closed at $165.63. That is trading at $169. Numbers on Baidu go like this. The estimate was $1.18. They made $1.22. The revenue estimate was $2.98 billion. That's third quarter revenue. Now they're only going to make 2.7 to 2.8. So the market actually is being pretty kind to Baidu.com, because they're saying going forward they're going to actually make less. But guess what? The market is kicking it up $5 at 170. And Baidu, if we do take a look at Baidu.com, this also has been in a downtrend for quite a while. The high in Baidu was established at $251. That was in November of 2014. So the numbers continue to come out here, folks, and they're all over the place. There's no two ways about that. What I do expect is that when we see these futures open back up, particularly the NDX 100, you're going to see that NDX 100 move higher. Why? Because what we had at the close, as we were closing, you had Google up, you had Priceline down, you had Expedia down, but what you also had, you had Amazon down versus Amazon now is up $14. It was down $20, $25 when the NDX was trading. So what you'll get out here tomorrow is this. So check it out. So if we look at AMZN, if we look at the aspect of weighting structures, what you're going to see is that you're going to see that APL, you're going to see that Apple, came out 2 days ago. Apple is holding price. So it doesn't mean that Apple has to, it won't, let's put it this way, it won't take away from the NDX 100. Apple was up $1.30 today. It has the juice behind it. Apple probably is going to try to run up to somewhere about the 109 level. Right now you're at 104.34. In fact, let me just say this. Yeah, it's catching a bit of only 10 cents after the market. Amazon is going to be over its high, right into it, 65. That's going to be over its high. And Amazon, as I said a little bit earlier, that also now is an ABC structure in the way up. And that has an 803 price projection. And right now, Amazon is trading at 765. Google is an ABC up. This is a monster, Google. Google closed at 745. It's trading 772. That's an ABC up with a 1-to-1 price projection of 814. It's Tom O'Brien's TFNN. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And if we go over to Amazon for a second, we take a look at where they are in these numbers. This is where you're at. So revenue, they get, I'm not sure whether the call's going on right now, but what they did send out, and this is where the equity, I suspect, went from down $20 to up $15. I get a press release in front of me, and so here's some of the key points. Revenue, now we're talking, okay, they came out with their quarterly numbers. Now, what this release is about is that what they're doing in this quarter that will be reported in another 3 months. Revenue in the current quarter is going to be $31 to $33.5 billion, the company said in the statement. Analysts had estimated $31.6 billion. So the bottom line is that what they're saying is that they're going to make more, well, the high end is a lot more, $33.5 billion. That's $1.9 billion more in 90 days, folks. Their sales gained 31% to $30.4 billion in the second quarter compared to the projections of the analysts of 29.6. The net income is $857 million, $1.78 a share. And this is this. So check this out. This is a big kicker. The Amazon Web Services, folks, increased 58% from a year earlier. 58, big number. 2.89 billion. And this is the kicker that, I suspect also is going to get reported in. And this is their Prime Day. Their Prime Day this July generated 60% more sales than the first event a year earlier. Okay, so big number, and that's why more than likely we just saw Amazon go from a negative 20 to a positive 15. We go take a look at SYNA. There are so many SY. There are so many numbers coming out here. It's pretty amazing. So this is Synopsys. This closed at $53.78. This company here, they they have custom designed user interface. The company's solutions enable people to interact with a variety of mobile computing and communication devices. This is trading right now at $52.61. So let's picture that it's trading right where it actually closed at. Not much action here. This equity had come down from $102. Right now you're trading at that 53. MRST. We take a look at MRST. MRST. I must have the wrong. MSTR. Thank you. Okay, so MSTR. This is MicroStrategy. Okay, so MicroStrategy closed at $185. This is software technology. Closed at 185, trading at 185. Man, this is all over the place, though. This is down to 178, 180. So here's the numbers here. They missed their lower estimate. Their revenue was $123 million. Earnings per share was $1.64. And they missed on the revenue, so the market's being kind to them right now. They closed at 185. It had gone down to 178, but it's back to 185 right now. WDC. So this is Western Digital. This is a storage management company. This closed at $53.70. That is trading at $53 to $52. Numbers go like this. The earnings per share was 79 cents. Revenue is $3.5 billion. Western Digital reported revenue of $3.5 billion on a net loss of $351 million. Must be a trip, man, taking in $3.5 billion and losing money. That's a mind blower, man. You talk about the cash flow, but that still doesn't make a whole bunch of sense. The company generated $355 million in cash from operations during the fourth quarter, ending with total cash and cash equivalents of $8.2 billion. Not bad. The company declared a cash dividend of 50 cents a share. So that loss, let's see then. Yeah, who knows how that loss in the year. The loss, maybe it's a depreciation loss, which is a whole different ballgame. Because a depreciation loss is not, well, it doesn't have to be a real loss. Let's put it that way. Western Digital is at 53. Oh, this has got smoked too. You know what's amazing, folks, is that we are at highs, and when you start bringing a lot of these different equities up, they're not at highs. Okay, I mean, not even close to being at highs. So pretty amazing. We take a look at the some of the higher volumes. Well, here let's actually see what we came in with volume-wise today. So on the NYSE, we came in at 875 million. On the Nasdaq Composite, we came in at 1.9 billion. When we look at this composite, the composite's at 51, 54 right now, and that ABC structure is about another 300 points. And, we'll see how we get up into that area. The small caps, we go take a look at the small caps, the IWM, that just is having a hard time getting to higher price right now. That's going to need a lot more volume at the area that we're actually in right now. The SPY thus far has been, it's an ABC structure on the way up, but it's having a tough time getting higher. And I do expect that we're going to see that again tomorrow, because if we do go over to the XLE, what you're going to see in the XLE is that it was flat out here today, but the two largest weighting structures inside the XLE, which happens to be 34%, which is Exxon and Chevron, well, they're coming out with the numbers in the morning, and both of them look like they want lower price. The other equities that are inside that XLE evidently helped the XLE in a big way out here today. If we go over and we take a look at let's go take a look at Walmart and see where Walmart's been trading here. So Walmart rejected lower price out here today. That's coming out with numbers August 18th. And yeah, this is having a hard time at ICE too. Walmart, benchmark on Walmart, $72.23. It's over it right now, but you get back underneath that, it's going to be trouble for Walmart. That's how that shakes out. Not huge trouble, but $70. And you get under 70, then you're going to be right back into the $58 area. So that very well could be some real problems. I'm Mr. Larry Pesavento. He's on at 10 o'clock every morning, 9 o'clock, 9 to 10. And he's been talking about the New York Composite quite a bit. And hey, happy birthday, Larry. It's a beautiful thing, man. Health, happiness, prosperity, many more. It's his birthday today. What a trooper, does the program anyway. And if you take a look at the NYA, what you're going to see is this, folks. It's pretty amazing. We're at highs, but yet the NYA can't get over the downdraft that was created last August. The top of that downdraft is 10,916. And, that NYA has got to get up and over that area in order, to basically have the rest of these confirm. My take is it's not going to happen. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And folks, if you do want to go to my workshop tonight, you can come over to our website at TFNN. You can see it right on the front page. You can get my newsletter for a full month. You can get The Art of Time in the Trade, my book, and be in the Tiger's Den. You can test drive the whole deal, absolutely free. Go to TFNN. You're going to see it right in the front. This is going to be from 6 to 7 tonight. And if you can't make it live, it'll be on your page for 1 full month. So you can go over this as many times as you like. We look at these markets out here, folks. Bottom line is that the NQs, meaning the NASDAQ 100, and the composite have the strength, it looks, to finish this ABC structure on the way up. The composite itself, I expect what you're going to see is that it'll probably be the IBB. The IBB right now is going after its highs, which is 289 or 287. So that'll keep the composite up. And hey, listen, the IBB could take away this, get over this consolidation. The top of the consolidation is 289. You know, so if it gets over that consolidation, you're going to see some big juice in that IBB. It's still, to me, it's a dead cat bounce. We're down off $400, okay? But bottom line, that can get higher price. What you will see is that Google, Amazon, higher price. PCLN looks like, bottom line, that's making a comeback also. It was down about $75. Now you're only down $26. You know, so there's going to be a lot of numbers coming that have come across the tape. They're going to be pushing equities in the morning. EXPE, Expedia, that is down $7. That was at $119. That's at 112 right now. So that's another equity that is not going to be able to handle its highs. The high that we're talking about is the $118 area. That's not going to be able to handle that high either. Bottom line, you can expect a lot of action tonight over in Asia. In the Japanese markets, I expect we're going to have some action, because what is happening in the Japanese markets, it's kind of like our central bank having meetings. It's not only the Bank of Japan having meetings, it's going to be the government simultaneously. And, you know, we'll see if, in fact, they come out with any types of statements. That will affect the Nikkei as well as the yen. And it's the yen that can get some stuff rocking and rolling out here. The yen is trading right now at 105.29. What their government is trying to do on a continual basis is trying to make this, get this thing weaker. They were successful, you know, for a couple years which was helpful. They were successful from 2012 going up to 2015, July of last year. Since then, the yen has got stronger again. As the yen gets stronger, folks, they have a huge time bottom line making money, the companies. The thing that's amazing is that, and this is the correlation, so picture this, that the monetary policy inside Japan is 75% of the GDP, the monetized debt. And in that context, even though they monetize debt, the yen is still getting stronger. It's like that is the disconnect in a big way. That would be saying that we monetize our debt, meaning all the bonds, that the Fed buys all the bonds, and our dollar would keep getting higher. That's the disconnect, okay? So we'll see where it does shake out. And I do expect that is going to put some juice into the markets out here tonight. And it was one of our tigers. Let's see. Japan's finance minister said he's prepared to undertake intervention in the foreign exchange market if the yen rises more and sharply, countering speculation that the U.S. opposition would constrain Tokyo's actions. Yeah. It's all gloves off right now, folks. Gloves are off right across all the world currencies, because I suspect that, this whole negative rate deal, this wasn't taught anywhere, and they're all grasping. They're grasping in a big way. You stay right there, man. Mr. Andy Heck's going to be coming up with you. And, of course, folks, remember, if you're in your car right now listening to the radio, go right to your cell phone, TFNN.com, hit Tiger TV. Have a great one. Have a safe one. You stay right there, man. Mr. Andy Heck is coming right up, folks. Go get him, folks.